Welcome to the Halftime Report. I'm Courtney Reagan in today for Scott Wapner. Front and center this hour, a critical week for your money as more key data and the next Fed rate decision loom large. The investment committee is standing by to break it all down. Joe Terranova, Shannon Sakosha, Steve Weiss, and Bryn Talkington are your traders today. Here is a quick check in on the markets. We have a relatively sanguine market here. The Dow Jones Industrial Average just about flat, maybe a tick to the downside. S&P 500 higher by about 0.5%. The Nasdaq Composite again leading the way, higher by 0.9%. And we will get to the setup for this week. But first, we're watching Alphabet crossing above the $3 trillion market cap for the first time ever. You can see higher by more than 3% here today. This is a really big move. I can't believe it's been 10 years since the creation of Alphabet as the holding company, because I always still want to call it Google, but we know it has many, many businesses. Joe, I want to start with you just because you're sitting right here. I mean, we talk about these market cap milestones. Does it mean anything to you other than it's so widely held, it's so important to the broad scheme of the market, but hitting a certain number? Does that suggest something?
I just think it's evidence. Look, if you go back over the last 15, the staggering return for the NASDAQ, what's it attributable to? It's really the remarkable earnings growth that you're seeing from these massive corporations. While I'm speaking in the control room, if you could show the XLG, that's the ETF for some of the largest market cap companies, you could see the powerful breakout that's occurring because what we're witnessing here with names like Nvidia, like names like Alphabet, like names like Apple. So in the case of Alphabet, they had a very clear clearing event with the antitrust ruling just several weeks ago. That lifted sentiment dramatically. That brought a lot of people in from on the sidelines. And I always like to look at, when you're thinking about sentiment, where is the analyst community? So you could take the Magnificent Seven and you could look at the analyst community and say, okay, in the analyst community, where am I on greater than 90% of the analyst community having buys? You'll find four names there: Nvidia, Microsoft, Amazon, Meta. A tick below that would be Alphabet at 82%, and that's lifted up from the 70s. Not surprisingly, at the bottom would be Apple at 55% and Tesla at 44%. So it's a sentiment lift more than anything else, on the premise that, look, they've got this clearing event that's affecting and acting as a catalyst.
Shannon, what do you make of this? I mean, we were also getting a reiterated buy at Citi today to 280 from 225. We're sitting at 248, so right about in the middle here.
I think it's a combination of both this inflection point or clearing event, as Joe said, but also the multiple. If you look at how Alphabet is trading versus the other Mag 7, you know, it's only Meta's cheaper in terms of its forward multiple. And so I think there's also this continued strengthening or acknowledgement that this AI trade has some continued transmission, likely over the course of the next couple of quarters. So we came into this year, Courtney, many analysts thought that we'd start to see a pretty meaningful deceleration in year-over-year earnings growth for these companies, and really we haven't seen that. And so not only has that managed to create continued enthusiasm about the amount of CapEx that's going to be spent, you're also starting to lap that point in time where we anticipate that other companies outside of the technology sector are also going to want to get into the AI game in terms of making their own investments. And so, you know, there was anticipation that perhaps we'd see a bit of a slowdown in AI spend for these hyperscalers, and then we'd have to wait for the rest of these industries to catch up. Now we're, you know, with this sort of longer tail for AI spend that's benefiting the hyperscalers and their continued earnings growth, it's really lifting, you know, both sides of that narrative. And I think that that's really where you're seeing some enthusiasm here.
Yeah, I mean, it looks like Alphabet is going to spend around $85 billion in total CapEx this year. Weiss, you own this name. You're in Alphabet. We often also talk about maybe some of the smaller assets, but perhaps very valuable in the social media world, like YouTube. I mean, are you getting YouTube for free with an Alphabet valuation?
Always difficult to say because you don't know where analysts and where, you know, investors are placing the value. So it could be getting part of Waymo for free. Who knows?
Yeah, sure.
But the point is, I think, is that what's driving this is that is that I think some investors think they've discovered, to your point, the undervalued Mag 7. And it was, and they're buying momentum, which Joe based his strategy on. So take a look at what the stock bottomed in the recent moves in this. And it's not only this, it's like United Healthcare. I think it's more defining for the market than it is for Alphabet. So to me, that's just the trend in the market. The market just goes higher. Earnings don't mean much. I mean, they've executed well, and the controversy over whether they have AI or not seems to have subsided at all, and now they're executing. And by the way, the lack of AI doesn't impact how Apple's traded. So these are purely momentum trades in a momentum market. Now, I actually think that, relatively speaking, Alphabet is cheap. It is inexpensive. It's not cheap, relatively inexpensive. So that's why I'm there. If we're a normal market, I still say, you know what, deserves a slight premium to the market. And I could see it going higher, but some of the others, I think, like in Apple, are way overpriced for their growth.
If you look at that 3-month chart, I mean, look at that momentum. It just follows sort of, even starting in May, just straight up. And Brent, I know you're nodding your head there. I want to get you in on the conversation.
Yeah, I mean, I think this is more than just momentum with Google specifically. If you go into the Apple App Store, Gemini is the #1 downloaded app, free app, above ChatGPT. And so I think where a year ago, at least I was, and a lot of investors were like, well, ChatGPT has taken all of their OpenAI, taken all the oxygen out of the air. Well, now, Gemini is really finding its point and finding its place. And you think if Google has access to all of our YouTube, all of our search, and all of our Gmail. And if you put that together and you put it with a partnership inside of Apple, and you have this secure data set within your own information, really Google via Gemini could be pretty slick. And so I think that, people are starting to realize that. And last week, the CEO of DeepMind, I think his name is Demis Hassabis, was speaking at the All In Summit. And, he really walked through all of the big metrics that Gemini is succeeding in. So I think people are starting to realize that, Gemini is going to be a real contributor. And I think if anything, the private market valuation of OpenAI is the one that's overvalued. And I think Gemini via Alphabet will continue to gain a ton of traction.
Yeah, go ahead.
Yeah, I just want to add one point. Bryn points out Gmail, and Gmail just has only started recently to increase pricing. And when you're going through the antitrust litigation issues, you're not going to do that. So think of it more like Netflix, where they use their power, and about 40% of email users around the world use Gmail. Just think of what they can do to increase pricing, the levers they can use, and that'll drive more profitability at Alphabet, which again, they couldn't do while they're under antitrust scrutiny. So I think that's another level.
The antitrust ruling, look, I think the visibility that Alphabet has been afforded since the antitrust ruling is, Bryn's talking about positive fundamentals. Yes, we understand that, the effect of Gemini, the broad diversified business model that they have, YouTube, but you don't get to see optically those strong fundamentals if you don't get the antitrust ruling.
Sure.
That is a massive clearing event, and that clearing event is the reason behind, as Steve talks about this being a momentum market, that's what it is. And when you get that lifting of sentiment, that's when you get the price discovery and you see all of these quantitative funds compiling into the market and pushing a particular equity name like Alphabet in one direction.
So
you had nice moves before that, though, in fairness. I mean, the stock bottomed 160, traded 200.
Yeah, stock's up 31% year to date, right? 18% of that move has been since the clearing event, since early September.
You can see that move in the chart. Go ahead, Shannon.
And I guess my concern or my consideration for where we are today is that we see yet a fourth company reach that $3 trillion market cap. And we talk about this momentum,
so
this
Nvidia,
concentration.
Microsoft, Apple, and Alphabet here.
So, at some point, that is potentially a concern for those of us, including myself, who are looking for this rotation, right, in the market, down mid-cap, small-cap, outside of the U.S., when you have such large companies that are essentially, multifaceted conglomerates that make up such a big part of the market. And so, you wonder how much that this will perhaps hinder as more and more assets are concentrated in these very large companies that are doing quite well from an earnings perspective. How much will that hinder this potential rotation in search for value? And I think the momentum factor only compounds that.
Got it. I do want to go back to Bryn's point, and I agree with what you're saying. Well, let's talk about these other big companies. Bryn, you were talking about OpenAI, DeepSeek, Microsoft. Microsoft's another big name. It's still up. It is the worst big tech name, though, over the last 3 months. And there's an interesting report from The Information saying that OpenAI is set to gain $50 billion from cutting revenue share with Microsoft. So the difference between these two things could be $50 billion, again, according to The Information. I mean, what do you make of that report and the opportunity that could be available for OpenAI?
Well, I mean, OpenAI is making lots of promises that need to be funded by private investors since they have revenues, but they're losing just billions of dollars on top of that. So, I mean, I think that would, let's take it at face value. Obviously, Microsoft and OpenAI signed an agreement, which we don't really know the details of that agreement, except that Microsoft is going to, let them pass, we'll say, to go public. And I think over time, if those revenues continue to build, it would make sense that Microsoft wouldn't get that current amount they have today. But I still think that Microsoft, instead of paying $500 billion for secondary shares in OpenAI, I think Microsoft, with tons of free cash flow, multiple levers, is a better way to play it than buying OpenAI on a secondary market at $500 billion.
Got it. Joe, what do you make of this when you've owned Microsoft in the Joe T? We're closer to $4 trillion than $3 trillion for Microsoft.
I think Bryn is spot on. This is a way to get in the public markets the exposure to OpenAI. There has been a little bit of a deceleration in the rate of appreciation for the stock year to date. Let's remember at the beginning of the year, Microsoft is one of the clear winners in the Mag 7. It was the name that you wanted to own. It had the strength in cloud. We heard last week from Oracle. Are we witnessing a moment where maybe Oracle is capturing some of that cloud market share from Microsoft and others? I think we'll learn about that in coming quarters, but I'm not particularly troubled about what appears to be, over the last month or so, a relative underperformance from Microsoft to its peers like an Apple, like a Tesla, like an Alphabet. I just think that's more of an internal rotation, position squaring more than anything else. I think collectively, when you look at the universe of Mag 7, there is going to be a ceiling at some point on these earnings. There is. And there's going to be a moment where the market is going to correct as a consequence of that ceiling. But I just don't think it's in front of us here in 2025. I think it's probably when the calendar turns into 26.
Weiss, Microsoft?
Yeah, look, I own it. It's a permanent compounder. It goes through periods of time where it lags or where it's down, and you just have to fight through them. You've got Windows 11 coming out. You'll see a lot of upgrades. You'll see increased subscription pricing. In terms of OpenAI cutting $50 billion, I'm not sure that's correct. I'm sure, to me, what it means is they're not going to give as much revenue to them, but you still see a percentage of revenue, but you'll still see the revenue grow. Okay. So in the meantime, Microsoft has also hedged their bets, not only relying on OpenAI. And we're seeing OpenAI has major funding concerns going forward. So I still like Microsoft. I see no reason to get rid of it.
Okay. I want to shift gears a little bit to Nvidia. We're covering from earlier losses, but a report on CNBC.com, China says that Nvidia violated anti-monopoly law after a preliminary probe. It's almost impossible to talk about AI without talking about Nvidia. I can't believe we've made it 13 minutes in without talking about it. But Brent, I'm going to toss this ball up to you. I know you're an owner there. Any concern about what's going on between these headlines? Again, more headlines about the U.S. and China's relationship and policy, rules, regulations. Does this scare you at all, or is this you sit and you hold on Nvidia?
No, I mean, I think the timing is suspect. Obviously, they're having very big conversations around TikTok and other trade agreements. And so I think that this is a way for China to, in a very subtle way, just to say, hey, wait a minute, we're a big market. And so I would just totally dismiss it. Or I am totally dismissing it.
Yeah, this is surrounding the Mellanox acquisition in 2020. And what's unclear here is what's the recourse. Okay, we feel as though there was a potential antitrust violation, but what is the recourse going to be? So I think Bryn is correct in kind of identifying this probably more than anything else is a negotiating tactic as the president is set to meet with President Xi later in the week.
That's all it is. It's just negotiation.
Okay.
Nvidia right now.
So no real risk.
Not to this, no.
Okay.
Not to this. Nor to the semis where they say, the other semis where they say, oh, they're dumping. It's just, it's nothing. Just move on. Nothing to see here.
Okay, so the headlines, we shouldn't get scared by the headlines. Shannon, you agree?
I mean, I don't think these specific headlines, but I think that what investors and the watchers of the show should understand is that semis are going to be in the narrative between China and the U.S. for the foreseeable future.
Quite a negotiating chip, pun intended,
yes,
right?
Absolutely. And I think that, there is a lot of concern about national security, our access to, our sharing of that technology. And so I think this is part of really what is likely to continue to be an AI arms race between China and the U.S. And so despite the fact that I don't think these headlines are necessarily disruptive, if you own any of these companies, it's something that you should be braced for, particularly as you're looking at semis versus software and some of the negotiations that are going to come out of the talks between China and the U.S. over the next several months.
Before we move on from chips, Joe, you own Broadcom, and it was initiated to outperform $420 price target at Macquarie. And the firm is talking about expecting surging demand for the ASIC to outpace GPU growth. Do you like this call? I assume you do if you're bullish on the name.
Absolutely staggering quarter last week. I'm sorry, staggering quarter several weeks ago from Broadcom. The real staggering quarter last week was from Oracle. But they are proving themselves. Now, look, if you're going to focus on valuation, valuation's getting stretched in Broadcom. Steve, I know you've spoken about that at length. But if you're also talking about the dominance of market share, then you identify Nvidia and you identify Broadcom as the two names that are so critically vital right now in this AI infrastructure build out and the delivery of chips, the ability to stack chips. That's where, to connect the chips together, that's where Broadcom is valuable. So again, look, we're beginning the first 15 minutes of the show talking about all the Mag 7 names, talking about all the AI names, and we're sitting there saying to ourselves, and I think this is really the big conflict for viewers and for investors. It's almost as if coming into this month, the market was saying, which direction do you want to go? Do you want to go in the direction where you stay with the Mag 7, the AI infrastructure build out, or do you want to make a pivot? We'll talk a little bit about what the Fed's going to ultimately do. Do you want to make a pivot in the direction of the 493, the rest of the market? I asked the control room to show XLG before. Well, how about we show RSP, which is equal weighted, and see what equal weighted is doing today, which is basically unchanged on the day. So you have this conflict, which direction do you ultimately want to go? And it seems like one day to the next, we're trying to figure it out, but I will say this. The Mag 7 and these large companies, they are delivering on the earnings, and it's up to the 493 to have a similar type of earnings delivery.
So I'm going to pull some of this together before we get to the Fed. We've already talked about China and the headlines there, and we're talking about chips. Let's talk about Apple. Obviously, we've got these pre-orders for the Apple iPhone. Some reports trickling out saying that they're breaking records amid strong demand in the South China Morning Post. Of course, we take all that media with a grain of salt, but we know that China was about 16% of Apple's revenue in the most recent quarter, and it's a very important.
Down from over 20.
Right, exactly. So they've got some ground to make up, and it's still a very important market for them, of course, even if it's falling. What do you make of the headlines on the pre-orders? I mean, analyst takes starting to trickle into.
Pre-orders mean nothing. Okay, that's just the initial demand. The first adopters ones that want to go wait in line in the store, they mean nothing.
So it's not indicative of broader demand,
broader sell-through. No.
Okay.
And I'd say that again. Well, I wouldn't say disappointed because now the expectations from Apple on new product release are always muted. Right? So they still don't have an answer for AI. They still don't have, they've improved Siri somewhat, but basically they still aren't innovating to any degree. And that dialogue, that narrative, which I've been talking about for years and was always, disagreed with, is now the main narrative. Even to the extent, is Tim Cook going to survive this cycle, or are they going to bring somebody? In the meantime, they continue to lose creative people, and And I think the shares are overvalued for a company that's slow growing on both the top line and bottom line.
So what do you attribute what's happened since last week's announcement? Because look, I sold some. I sold half my Apple position. I came on.
Half the position.
I sold half my position. I said, "Where's the beef?" Going back to the Wendy's commercial from the 80s. I didn't think you got anything of what you really needed with AI, but the response since last week has been good for the individual stock of Apple. The stock is actually rallying. So is that the index effect, or is it attributable to specifically to Apple? I don't know the answer to that.
Brandon, what do you think? You're an owner. Brandon, can you hear us?
Oh, yeah, sorry, I didn't know you were talking to me.
No, that's okay. What do you think? Is it the index effect, the move in Apple shares?
I don't have an opinion on that, but I do have an opinion on Apple as a hardware company. And the Apple 17 Air is the first new redesign that we've had in years, in many, many years. And so I think you're going to see a lot of demand for that 17 Air, much more than is anticipated, because it is so thin, and like the whole CPU, or however you want to call it, is in that upper part of the phone. I think it's very cool. I think you're going to get people buying the AirPods. So much innovation there. The Apple Watch got hypertension FDA approval. So they actually do continue to innovate because they are a product company. The software will come next. And I do think that the Trojan horse has always been Siri, and they need to execute. So I've been in Steve's camp. I mean, I've traded around the stock that when you just look at pure fundamentals, revenues and earnings are adequate. But I think the negativity around the stock, I do think people are going to be surprised, and I do think the 17 Air specifically is going to get much more traction than people are expecting today.
You know, I was excited about the Air, but given the fact they've stayed in place on the camera, whereas the others, that's really all they ever do. They improve the camera, and this camera is deficient relative to the other models. So I'd rather wait until the next Air, because who doesn't want a lighter, thinner phone?
Brent, I'm not disagreeing with you. I'm trying to understand. So you feel the news last week was actually positive, and the subsequent price reaction in Apple is warranted given that news?
I do. I think the anticipation of, they roll up the phones. I don't think the release of new products in years have put an upside on the stock. But I think that the pre-orders actually do somewhat matter to give you insight. Last week, remember we were talking about China was totally offline because there were some issues. Well, now it's back online. And so China is a massive market. Apple continues to be in mainland China. I think multiple phones are like the number 2 and number 4 selling phones. And I do think, once again, as a hardware company, people are going to like the thin iPhone, which is so important for people to upgrade. So I think it definitely has a lot to do with it, not just the S&P going higher.
Make sure I don't sell my other half.
I know, I was going to say, gosh, I guess you want to hold on to the other one in the move that you've seen since you sold the half. We're going to move on real quickly to... Welcome back. We're going to get some of the committee stocks on the move. Tesla is up after Elon Musk disclosed buying almost $1 billion in shares. Brandon, Joe, you both own it. Joe, I'm going to start with you because this was actually your final trade last week.
On Thursday, I mentioned this as a final trade, and I said it is a trade, and I kind of want to walk through for the viewers what we were seeing. Steve is going to cringe during this. If you focus on fundamentals, if you are analyzing companies, you are going to cringe when you hear what I'm about to say. But listen, I respect your strategy. I respect how you look at markets. For a moment, respect the way I look at it, because I'm explaining
as long
and
as
defining.
it's only for a moment.
I am defining for you how trend-following systems right now are implementing in the market, and they're real. They're a powerful effect. So if you look at Tesla's stock, I mentioned before, analyst community only had 44% of the analysts which had a buy rating on it. On September 4th, the stock gaps above 340. The stock gaps above 340, and that's your trigger signal at that point. Why? Because concurrent with that, at the same time, you have the moving averages turning up for the very first time. The 50, the 100, Bryn understands what I'm talking about. The 50, the 100, it turns above the 200-day. So simultaneously, this happens, okay? Now for the remainder of the week after September 4th and 5th, the stock never goes back to 340. What do you have sitting above? You have the May 29th high at 367. Everyone that respects price sees that and is now pushing towards that level for the breakout. And that's exactly what happened. This is a classic momentum move. I'm sorry to the viewers that want some fundamental explanation. And guess what? Elon Musk bought his stock on Friday, after all of this actually unfolded. So it's a classic example of a powerful combination of technical forces coming into play. And when you look at the Mag 7, this had 3% short interest. That's greater than any other of the Mag 7 names.
Okay, Weiss, then I'm going to let you respond.
Look, there's no, Brin's been great in the stock. We disagreed, I think, around 200 and change. And
180.
It is now 180. Okay, 180. But you can't disagree with the fundamentals. The fundamentals have been atrophying. But it's a cult stock, and I've not been shorted. I shorted periodically here and there. But valuation makes zero sense. Robots, humanoids. It's a crowded space already. But you've got a company, another company, private company, literally has no revenues that's now trying to raise capital at $38 billion. And so it's bizarre, and that's what people are looking for, the next great thing. Tesla's sales have atrophied also. So robo-taxis, that's crowded before they even launched them. So what do you own here?
I don't know. Maybe you're not owning Tesla. Maybe you're owning something bigger than that, right? You're owning Elon Musk. You're owning the future. You're owning
That's
innovation.
the last thing I want to own is Elon Musk, frankly.
All right.
So,
Bren, go ahead.
So I think it's important. I think Joe did a great job of walking through exactly what happened from the momentum perspective, and I couldn't agree more. Let me share some catalyst, right? And so last week, Elon spoke at the All-In Summit as well, and so I think this is important. So the geofencing with the robotaxi is I think they have about 150 robotaxis between Austin and San Francisco. The geofence continues to get bigger. He is saying by year end, there will no longer be supervised drivers in there. So that's a positive catalyst. Also, right now inside of Teslas, you have the AI4 chip. They are finalizing the AI5 chip, which he said is 40 times, not 40%, but 40 times faster with 8 times the compute. And he said by year end, you're going to get a version 14 update to the Tesla, which will be 2 to 3 times as safe as a human driver. And so from a catalyst perspective, and on top of that, I think you're going to have a big pull forward in the Q3 numbers because the EV credits are going to go away. And so I think they're going to have a big beat on Q3 EV sales, which probably will mean revert in Q4 because I do think it's a pull forward. So there are definitely clear things that happened last week to help continue Joe's momentum push and then, top it off today with, Elon announcing he bought almost $1 billion. I do think that 440 is rarefied air. I'm not adding to the position here. I think that you will see a settling in after, in the next couple of months because we're approaching that December 2024 high of around 448.
Yeah, so it looks like Elon bought his at an average share of $389.28. We're sitting at $419 now, up about 6%.
You had 20% since we talked about it Thursday on the show. That's a powerful trade, and that's what it is. It's a trade, nothing more.
Okay. We're back on halftime. Senior markets commentator Mike Santoli joins us with his midday word. Mike, I'd love to get your take on President Trump's post on Truth Social, basically saying companies and corporations should no longer be forced to report on a quarterly basis, but rather report on a 6-month basis. We know this discussion has been brought up before, not necessarily by the president, but Jamie Dimon and Warren Buffett, they wrote a Wall Street Journal op-ed in 2018. What do you think about this? Do you think there's any possibility this could happen in the U.S.?
Seems like a little bit of a long road. It's unclear if there'll be sustained policy energy directed at actually implementing something like this. But, I think that there's a line between, giving less information to investors in the market, which is what this would mean, and trying to encourage the principles of companies operating for the longer term. I think Jamie Dimon and Warren Buffett were more talking about corporate guidance and not really offering 3-month forward guidance in any detailed way. Warren Buffett's been against that for some time. And I think there's a decent argument to be made there. I think the markets would adapt. I think there's a good question as to whether it would make stocks more volatile. And perhaps compress valuation. But, it's an interesting one. It doesn't seem to me like it's one that the world's clamoring for. It's more a gesture of let's try to ease the burden on big companies in some way that seems like it might get a little bit onerous at times.
I see. I can understand Shannon sort of wanting to make this easier and let companies actually run the business as opposed to trying to run the numbers all the time. But as a person who trades on information, I would hate this.
Yeah, I mean, I think that the reality is that the expectations of both the asset managers and perhaps more importantly on the sell side, in order to have this, continued transparency, and it's sort of the opposite of what we've seen elsewhere, right? We've seen the Fed increase their transparency. We've been clamoring for greater transparency in economic data, more frequent updating. So I think it would be an adjustment if we were to move in this direction. Also, countries who have adopted this type of schedule, they haven't necessarily been rewarded for that in their stock performance. So maybe transparency is helpful.
Yeah, look, I wouldn't be against it, frankly. Semi-annual reporting. We have precedent for it, which is in the EU, which they did that, more than a decade ago. Now, I don't think China, as the president points out, should be the model for anything we do. Their capital markets just aren't trustworthy. So what it will do is it will hurt certain things, like Robinhood. Just an increased trading volume, greatly increased trading volume happens 2 days before earnings and in the aftermath of earnings. So that would pressure, I believe, earnings at some of the brokers. And it would also make analysts do work. So that's an issue as well, because they've gotten used to companies telling them we're going to earn $5, and they come out and say no, you're going to earn $5.02, and that's what they get paid a lot of money for. So I'd like to see them work for that.
I think we should be open to the conversation of exploring what's the right time frame. I think too much information actually diminishes the effect of the actual information itself. You can make an argument that the transparency that the Federal Reserve is working under has actually diminished some of the messaging because they're giving us too much information. Maybe we're going back to the world that we lived in, Steve, in the 90s with Alan Greenspan. Maybe that was a better environment. So I don't know. I think you have to be open.
I agree with that.
I think you have to be open to the conversation and kind of understand, okay, where are we on what actually is the right time frame? Who said that 3 months is the actual perfect time frame? Maybe it is 6 months. Maybe it's somewhere in between, but I think we should.
Yeah, I agree. I've been advocating for the Fed to say less. You don't need, it's destabilizing, I think, for the market. And I do think, if you go to semi-annual, that you'll have more long-term thinking. And I don't think it'll pressure valuations at all. I really don't.
Well, I don't think this is the last time we're going to talk about it either. But for now, we're going to have to leave it here.
I think there's a path to it, too. Just do it by executive order. The SEC reports to Trump, and it's done.
Oh, there's another idea. Let's see what happens.
There you go.
Thank you, Mike. Thanks for hanging with us. We're back with final trades. Bran, you get to kick us off.
Right, Apollo, it's about 15% off year to date, and they're looking to grow earnings and revenue about almost 20% in 2026.
Weiss, you're up next.
FTAI, it's had a great run, but as rates come down, their spreads, because they are lending, financing, should increase. So I think this goes above 200.
Okay, Shannon?
Materials with lower rates, a cyclical impulse, and continued heightened geopolitical tensions. We think there might be an opportunity, particularly for areas that are tied to precious metals.
And Joe.
There's a soft affirmation of gold, too, as well. Uber, new all-time high today, approaching $100. It's going to get there.
Okay, well, that does it for the halftime report. The exchange starts right now.
Hey, I'm George with Blue Cloud Trading. It's Monday, September 15th. Hope you all had a good weekend. It's now after the market closed at 6:23 p.m. as I'm recording this video. Here's what we're going to do, folks. We're going to talk about the market. How did it perform today? We're going to look at the indexes here. We're going to also take a look at a number of stocks that they talked about in those clips on the halftime report from earlier. And we're going to look at the SPY, the QQQ, the Dow Jones, the Russell 2000, the VIX, the Euro stocks, Google, Broadcom. We're going to look at some of those stocks that they talked about, APO, right, Apollo. We'll look at some of the Mag 7 stocks like Tesla, Apple, Meta. Tesla had a big day today, up 3.56%, for example. We'll look at the strong sectors, and we'll also take a look at 5 member requests, which, by the way, all look great, as you will see in a few moments when we go over those as well. So let's get started. All right, so let's take a look at the markets here. As you can see, the Dow Jones, it was the one index that was basically only up 0.11%. You can see it was pretty flat the majority of the day. Okay, did not really move much. The Nasdaq, however, was up 0.94%. You can see the big gap up here in the morning. It moved up and stayed steady. It stayed steady. S&P 500 also gapped up and moved up slightly, up 0.47%. And the Russell 2000, it actually basically just moved up 0.42%. So these aren't huge moves, but the Nasdaq was up the most. As I mentioned in the members-only video this weekend, look out for the technology stocks. I think those have the highest potential, and a couple of other sectors that I discussed as well. Guys, if you want to see that members-only video, it's right here, just so you know. Okay, just come to my page here, Blue Cloud Trading. All right, we're almost at 23,000 subscribers. Don't forget to like and subscribe. Hit the join button in order to get access to that members-only video. You do need to become a Blue Cloud trader, so you got to select this middle option here if you want to be able to see those exclusive member-only videos. If you want to get daily updates on my trades, become a Blue Cloud Legend level member, okay? I post them. Once you become a Blue Cloud Legend member, you will see a new tab pop up over here on the right. It will say membership. You click on that. That's how you'll be able to access them, all right? So let's get back into what we're going to do next is actually take a look at the heat map. That's important. Always important to look at the heat map. So look at Google, up 4.3% today. Big move for Google. We have Tesla.
Sorry,
up.
I didn't understand.
Sorry about that. That's my Google Google Home thing. All right, we've got Oracle up today. Okay, for the first time now, because it did drop a little bit over the last couple of days last week. It's up 3.41% today. We're going to look at that chart. Actually, I'm not sure I put it on the list. Let's take a look at Oracle. I think it's an important one to look at. So let's go ahead and throw that one in there with the CNBC stocks. Let's go ahead and add that. ORCL. There we go. We'll look at that one too. All right, let's get back here. So what sectors were weak today? You can see the healthcare stocks did not do well. A lot of red. Same thing with consumer defensive stocks, except for Walmart, which was only up 0.19%. The financials did pretty well for the most part. But you can see here financial data, insurance companies didn't do so great. It's one day performance though. Remember that. Okay, but most of the technology stocks were up. Basic materials was also down slightly. Let's look at the groups here. This will show us a little bit more about the individual sectors, and you can see that communication services took the lead today, up 2%, and consumer defensive, healthcare, and real estate were down the most. All right, let's get into the stocks now. So we're going to start off with the index ETFs, and then we'll get into the rest of these in a moment. We're using the Ichimoku indicator, and if you're coming back to this channel, by now you are very familiar with this, but there are always new people coming to the channel, and I just need to give you guys a quick synopsis. What we're looking essentially for is the price to be above the Ichimoku cloud. All right, we want price to be above the moving averages, the Tenkan-sen, the 9-period, the Kijun-sen, the red line. So it's got to be above the Senkou span A, which is this light colored blue line, and the Senkou span B, which is the cloud. We also want this white line that you see in the background there. That's the closing price projected 26 periods into the past. We want to see that white line above the candle 26 periods ago. And one unique thing about this indicator is the fact that it actually projects into the future. As you can see here, the Senkou span A is comprised by taking the midpoint of the two moving averages, okay, projecting that 26 periods into the future. That's where you'll find it plotted. And the purple line is basically takes the midpoint, right? So that takes the highs and lows of the last 52 periods, or 52 days in this case, if we're looking at a daily chart, divides that by 2, and then projects that into the future, not below price like the Tenkan-sen and the Kijun-sen, or most typical moving averages, right? And because it's, even these moving averages are taking the highs and lows divided by 2, you'll also notice that a lot of times the actual moving average will flatten out, just like it is right here. When it does flatten out, it actually becomes a stronger level of support and usually bounces off those levels. You can see that right there too, or over here. Okay, that's the 26 period. Sometimes it will break through, but if you get a quick correction, then it tends to continue to move up. All right, so SPY looking very strong here. All-time highs for the S&P 500. The QQQ ETF, this is now above the 583.32 level, which is based upon this prior high here from August 13th. We took that out last week on Thursday, September 11th, and then 3 days now in a row, it's moving up 0.86%. The other thing I've got superimposed down here is the directional movement index, and I've got it at a setting of 9. Okay, that's the green line, positive DI, and negative DI is the red line. We want that positive DI to be moving up and be above the negative DI, and we want that negative DI to be moving down like it is. We also want the ADX, okay, I've got that superimposed on here as well, to basically be moving up when the green line is above the red line, okay? That shows us that momentum is increasing to the upside, all right? The momentum is increasing. When it's moving downwards, like you can see back here, price typically just kind of goes into a consolidation mode, all right? So it doesn't really move much, as you can see while we had that drop there. And now all of a sudden, you can see that finally the ADX is starting to show some, it took out this high right here, for example, and you can see since that point, if we go straight up, it's also breaking through this level. Dow Jones, DIA ETF, okay? This one started its move up back over here. It's now still holding up above this level, up just 0.16%. Not a big move today, but it's holding up above the moving averages, above the cloud. Russell 2000. By the way, you'll notice I have these little blue flags here. That represents strength on both the weekly and the daily charts. So if I look at the SPY on the weekly, you can see that's very bullish. Same thing with the Qs, the Dow. Okay, this is a weekly chart. Each one of these bars represents a weekly, the weekly candle, and then the Russell 2000 is coming close to that 244.98 level. It needs to break through that level. Okay. Let's look at the daily chart on that one. Still looking strong. Okay. Here's the VIX. Now, interestingly enough, the VIX was actually up 6.3%. So it bounced off this level, moved up. It did not affect price. Typically, when the volatility increases, price drops. This was interesting that it did not occur today. So that shows me that this market is even stronger than we expected. When the VIX is moving up and price is moving up, that's good. Okay. FEZ is the Euro stocks. Let's look at this one. Euro stocks looking good here too. We've got a higher low right here from the prior one. So we've got a nice little uptrend. And we just need to break through this level, that 61.50, that prior high right there. And the reason we need to do that is because then we'll be hitting all-time highs for the Euro stocks. Right now, we're not doing that. The reason I don't have this flagged here is because on the daily chart, you'll notice that the Tenkan has not crossed above the Kijun-sen quite yet, but it looks like it just wants to. I think it's going to happen probably tomorrow, maybe, if we have a bullish day for the FEZ ETF. All right, let's keep going. Let's look at the stocks talked about. Google, one of the stocks I've been holding now for a bit. So if we go back in time a little bit, I had added Google back on July 15th, back over here on this little candle here. And I got out when it, remember that day that it gapped up? That was on September 3rd. When I see something like that, when I see a big gap up, okay, that typically is a place where I might take profits. It's a profit-taking spot. And what I'm looking for is to see if price can basically, how is price going to respond after that big gap up? Okay, is it going to go sideways for a little bit? Sometimes it starts to drop and retest the prior support levels. In this case, price actually got back above. You can see that. And I got back in on September 5th. And I've been holding Google for a little bit. Now it's up over 8% as it's continuing to expand to the upside. So this is really good news for Google. I like it. XLG is the Invesco S&P 500 Top 50 ETF. And this one is also looking very strong here, right? So here's the weekly chart. Here's the daily. All looking good. Looks like I have some notes here. What's it say here? The objective of this ETF, right? It says here, tracks the top 50 stocks by market cap in the S&P 500, providing heavy exposure, okay, to the Magnificent Seven, about 50% of the portfolio, while including other large cap leaders like Berkshire Hathaway and Visa. And why it's an alternative, offers broader diversification than Mag's 7, so 50 stocks versus 7. So that's not a bad concept. I like that. But maintains significant Magnificent 7 exposure. Its market cap weighting emphasizes the largest players. So that's looking pretty good. You can see since it popped above the cloud here, it's moved up 21.48%. That was on May 2nd after that drawdown, remember, in April. So, yeah, it's been moving up nicely. Broadcom, here's a stock that I kind of wish I still had a position in. Let's look at the daily chart. I got out back over here, but it still continued to move up, obviously. And yeah, it's still really looking pretty strong. I mean, you've got the moving averages in the correct order. Tenkan-sen is above the Kijun-sen, the fast moving average. ADX is still moving up. It does seem like it's kind of just right here. There's maybe just a little bit of a pause, right? You can see that price is just pausing in this area here. So we'll see if it can continue, but it was up 0.17% today. RSP is the S&P 500 equal weight. They talked about this one too. Let's take a look at the highs here. Did it? Yeah, there we go. So it looks like that high right there of 189.99 was taken out last week on Thursday, September 11th. But look what happened. It pulled back a little bit. It's not the end of the world. I mean, it just means like, okay, it wasn't ready to continue its move, but why not, right? So the equal weight stocks in the S&P 500, this particular ETF is not as strong, obviously, as, like I said, the XLG, which was up 0.88%. FTAI Aviation, that was Steve Weiss's final trade today. That's been doing pretty well. It was his recommended stock back on April 14th, June 2nd. So let's go back to April 14th back here. Okay. Yeah. So like if he was recommending it even back here when it was under the cloud, it's actually moved up 72.5% since his call originally on April 14th. He reiterated his liking to this stock on June 2nd and then again today, September 15th, as it's continuing to move up. Now it's going to find some resistance at this prior high of 181.64. That's approximately 4.7% away from where we currently are. And that's the daily chart, and here's a weekly chart for you. Okay, so the weekly looks good too. How about Oracle? Check out Oracle on the weekly chart. Last week we had this candle. We saw that price reached a high right there, and then it started to get to decline, and we can see that on the daily chart right here. Okay, so a lot of profit taking took place, right? You get that long wick, selling started to take place there. We created what's called a bearish engulfing pattern right there between those two candles, where the body of this red candle is larger and engulfs the small bullish body right here of this candle, and then it dropped. And I said most likely it's going to find some support around this area, and maybe we'll get a little bounce. Now, I like the fact that it was up 3.41%. What I not too crazy about is this particular candle, because what happened essentially is price, when it did gap up, but then it started getting like selling a little bit. It didn't continue moving up. It did not take out this high. All right, so that's something I would be watching, basically. I'd be waiting to see if it can take out that high. Then I think it's got potential to continue to move up, because Oracle is a great company. All right, let's keep going. APO, Apollo Asset Management. Not a big fan of this one because it currently is under the Ichimoku cloud on the daily chart. It's under the 200-day moving average, and you can see it's starting to slope down here. Yes, it's had a few days here, like what is that, 4 or 5 days that it's been moving up, but it's been in a decline. It looks like it kind of broke out through this trend. Let's see, did it? No, it did not. Interesting. Check that out. So I'm just like taking this high here, taking that high, and just extending it all the way through, and you can see that it's still under that trend line. Okay, it's also under the clouds, so and the 200. So no, on Apollo, I would pass on that stock. Not interested. Hence why it does not have a blue flag. All right, let's take a look at some of the Mag 7, not all of them. Tesla, to start off, which had a big day up 3.56%. You can see that big jump, but then what happened? Profit taking. So apparently Elon Musk is buying back shares, and that's what helped to push the price up. So it's not based on anything other than that, in my opinion. Now the price has dropped, and if we could see all that action, by the way, from this candle, if we just switch it to a shorter time frame, we'll just do that. Let's put the 5-minute on. There's the 5-minute chart. Here we are on the 15th. So there's the gap up. Boom. Came to that level. Did it continue to move up after that first 5 minutes of the day? It did not. It did not get above that high of that in the morning. In fact, it just dropped. Okay, it went sideways for a bit. And then what happened? It dropped some more and stayed underneath the cloud. So, you know, not something I'd be interested in jumping into. The other thing about Tesla, even though it obviously has been showing some strength since it broke that prior high of 367.71, if you look at the weekly chart, the Ichimoku cloud is still bearish to some extent. You get that Senko span A, even though it is moving up, it has not crossed the Senko span B yet. So not all of the elements here are correct as far as what's necessary for a really strong uptrend. And it might look like it to you because it has in fact taken out this high. We've got a higher low here from this prior low, right? But the cloud itself is telling us, yeah, you know, it's not there yet. The directional movement index is looking pretty bullish, but look at that candle. I just don't like that candle. Apple does not have a blue flag. Why? Because the cloud is also still bearish. Senko span A is under the Senko span B right there. And it was up 1.12%. Here's the daily chart. We got a reversal candle. That's a spinning top. Meta. This one also does not have a blue flag. And the reason for this one is if you look here on the daily chart, the Tenkan-sen, the 9 period, is under the Kijun-sen. That's also a bearish sign when you get that negative crossover. Now, it does look like it wants to break above. And it might just do that tomorrow, possibly. But it has not done that yet, okay? And the cloud itself is bullish here in the daily. What about the weekly? And on the weekly, it looks good too. So Meta looks like it's setting up for a buy soon. How about Nvidia? Okay, let's look at this. Is the weekly chart. Still looking pretty strong on the weekly. On the daily chart, however, also does not get a blue flag because the Tenkan-sen is under the Kijun-sen. It is building a base here, and maybe it will pop to the upside, and it would need to break through that 184.48 in my opinion to show some strength here, because if it starts to break down some more, then we're taking out this low. We'll have a lower high from this high and break through that low. That's not good. Not conducive to a continuation to the upside. But you know, they came out with some bad news. I guess China, you guys heard that on the news there. China had some bad words about Nvidia recently, today. All right, let's get into the sectors real quick. Now, I'm only going to share with you the strongest sectors, and I've got them flagged here with a little blue flag, of course. Okay, XHB. Oh, I take that back. This one should not be there. Sorry. Let's take that one out. Granny Shots, Fun Strats, Tom Lee's ETF still continue to move up ever since they broke through that box that I built. Okay, I was hard at work building this box here, and you can see it broke through that prior high. It's continuing to move up. Since it broke through that level, it's already up 2.25%. It's looking good. ADX is moving up. Here's the weekly chart, looking bullish still. Silver, still on a tear. Beautiful, up 1.10%. Financials, down a little bit, 0.22%, but still holding up above the moving averages on the daily chart, and they still look good on the weekly. GDXJ has been doing fantastic, right? We've been talking about that one. That's the Junior Gold Miners ETF. And this one's up 1.62%. So once it broke through that cloud, it's been up 34.88%. That happened back here on August 4th. Okay, nice move so far. XLK technology, as I mentioned, is one of the strongest sectors right now. I did a more thorough analysis of the sectors. It's not just looking at the XLK. When I do the members only video each weekend, I'm looking at the entirety of a much more broad number of stocks in technology, not just the stocks that are within XLK. This is a small group. You can see this like 65 right there. We're talking about hundreds of stocks, and I'm looking at just trying to summarize how the technology sector is doing. In fact, I'll just show you guys. What I'm talking about. If I go to the drill down here under financials, all right, you can see here it looks a lot stronger, right? Now this is a monthly chart. Here's a weekly chart. Okay, here's a daily chart. Now they call this the SX30, financial services. You can see financial services sector. And then what I do is I break down the industries within the sector, and then I find the strongest stocks within the specific industries. So that's how I come up with a list of 20 stocks each weekend for this week. And in fact, I added a number of those stocks to the portfolio today. So you might want to, again, consider becoming a Blue Cloud Legend level member in order to access those trades. But why is this a little bit more, why is this more broader? Well, if you look at the number of stocks, it's 800. Let me just use my little pointer here. Down here, do you see this? 829 items. All right, so it's a much bigger group of stocks. So we're getting a better assessment of the sectors this way. Okay, you can look at the real estate, for example. Same thing, 301. You look at XLRE, okay, and how many stocks are in there? Not that many, 31. So you're not really getting a big picture, basically, is my point. And so that's one of the advantages of becoming a Blue Cloud, basically Blue Cloud trader and Blue Cloud Legend level member. All right, let's get back, folks. Let's get back to what we were talking about. We were talking about, where were we? We were up here at the technology. So XLK, like I said, it's looking nice. It's up 0.90%. I like it. Copper, COPX is a very strong uptrend still. Remember, Ichimoku stands for at a glance. You don't want to be staring at charts for hours trying to figure out what's going on with the stock or ETF or whatever it is that you're looking at, or currency, okay, or metal. You look at the chart, and at a glance, which is what Ichimoku Japanese stands for, you know it's strong. It's above the moving averages. You can see it very quickly, and you can move on from there and say, okay, I'm still good with this stock. Same thing with communication services. Today it was up 1.41%. Here's consumer discretionary. It popped, got back, got above, okay, the 240.28. This is really big. This is all-time highs now for consumer discretionary. That's good. I don't like the candle on the breakout because it did basically give away some of it. If we look at the 5-minute chart, it reached that level, broke above it, and then it started to come back down, but it still held above that 240.28, that blue line there, which is a weekly level, by the way, based on that prior candle. Okay, 240.28 from December 20th, 2024. So we're always looking back in time to see where might we find resistance, and we're above it now. Here's real estate, XLRE on the weekly chart, holding up above the cloud. The cloud itself is starting to look a little bit bearish here in the future, but again, the other symbol that I just showed you guys looks a lot more bullish. So daily chart still looking good, but it was down 0.12. Here's another ETF that's doing pretty good these days. Even though it was down 3.86%, Ethereum, ETH, okay, it popped above the 10 and still held up above it. So yes, today was a down day for it, but it did not break down, and that's good. And here's a weekly chart for you. It looks to me like it's kind of building a nice little pennant type pattern. Do you see this right here? So when this thing breaks, and if it happens with some high volume, oh yeah, because check out this volume, folks. See how it's been declining here? And it's just building this, it's coiling up, getting ready for a pop, either to the upside or to the downside. It could be either way. We'll see the volume increase, get above that 50-day moving average, that white line there, and it will either pop to the top side or to the bottom. I think it's more likely to go to the top. Why? Because we're still above the cloud. We get a bullish future cloud here in the weekly chart. On the daily chart, it's looking very bullish overall. Okay, so the probability is to the upside, basically. GLD. And by the way, if you guys don't know what a pennant pattern is, let me just show you guys that real quick. We've got this patterns cheat sheet here, and I'm going to just show you what I'm talking about. Right here, pennant, the bullish variant. So you can see what's going on here. Price moves up. Whoops, hold on, let me zoom in a little bit more. Okay, so price, okay, for whatever reason, this thing is not working. Give me 1 second. Okay, so here we are. You can see that the price moved up, okay, and then it starts to coil it, basically. That's the coiling process that I'm talking about. There's the pennant, and then if it breaks to the upside, that's you're going to see this thing take off, I think. And the fact that we have that from a move up, that's very bullish. Now, if price was declining, and then we saw that same exact pattern for the most part, right? We see this little pattern, the pennant. It's usually more likely to be a continuation move to the downside if it was coming from the top, but that's not the case here. All right, if we look at it, ETH on the weekly chart, we've been moving up. And so this is a weekly pattern, all right? And there's a lot of traders watching this right now. I'm sure of that. Anyway, let's look at gold. Gold is still very strong on the weekly chart. You can see it was up 1.04%. Here it is on the daily chart, looking good. And one more. SMH, still looking pretty strong. It took out this high here from August 13th, 302.98. It's at 307.17. I like it. We got a bullish engulfing pattern right there. ADX is still moving up. All right, now we're going to take a look. We're not going to look at the rest of these because, like I said, they're not ultra bullish yet. We're looking for some strong ones, right? Here's one of our members' requests, Galaxy Digital Inc. It's in the financial services sector, capitals market. Here it is in the daily chart. You can see that we've got a recent crossover here of the Senko Span A above the Senko Span B. That's bullish for the cloud. Prices above the cloud. It looks like the Tengen-sen has not crossed above the Kijun-sen yet. Let's find out the exact level. 2650, and the Kijun-sen is at 2651. Oh no, it has. No, it has not. Sorry, I take that back. By 1 penny. It's only a penny difference. It's not a big deal. But I think this is going to probably continue moving up. It's going to find some resistance around the 3317 level. That's another 7.7% away. Here's a daily. I'm sorry. Here's a daily chart right here. Looking pretty good overall. So I like it. Nothing negative to say. JSML, Janus Henderson. Janus Henderson Small Cap Growth Alpha ETF on the daily chart. Strong uptrend. Just broke this 74.37 level. Why is it colored purple? It's a monthly level. These are monthly charts here. You can see back here from 2021. It took out February 26, 2021 candle on a monthly. You can see what happened here, right? Price reached that level of 74.37. That reached that back here, dropped, came back to that exact same level. How many times does that happen? All the time, right? When I talk about this, and I show you how important it is to look at those prior highs. Came back not just 1 month, but 2 months in a row. I don't know if you guys are familiar with this pattern. This is called the tweezer top. See how those little wicks are around the same level? Let me show you guys that pattern real quick here. And it's bearish. They call that a tweezer top. Okay, the actual bodies are very close, to each other. You can see that right there, and then the wicks are very close as well. It looks like a tweezer. That's what we had back here, and price dropped, and then now it's finally broken through that. So it's above the 74.37. The small caps are finally have an opportunity here to move up some more. These are the small cap growth. That's the monthly. Here's the weekly. Here's the daily. Nothing negative to say. Here's ARK Innovation ETF. Now here's an ETF that, remember, I don't know if you guys remember back in during COVID, this was a stock that did not do so well. If we go back in time here, let's switch it to a monthly chart for a moment. There we go. So we reached this level here. It was around February 20. Yeah, it was like 2021. So February 26, 2021, we had that shooting star candle. We're looking at a monthly right now. And look at the big drop from that high of $159. It dropped approximately 79% in 1.8 years. That's a big drop. Now, since this bottom, okay, it started to recover. And now it started to build a base first, which is always what's necessary in order for, accumulation, they call it. You can see that right there. You can see how it popped through that little box. And let's take a look a little further, and you can see that it continued to move up, came down, created a hammer candle. That's a bullish monthly candle. And since that candle hammer, it's been continuing to move up. Now it's inside the Ichimoku cloud on the monthly. But on the weekly chart, now I'm making my decisions on the weekly and daily, all right? You can see that it's taken out this high here on the weekly. It broke through the 79.19 this week, all right? But we won't know for sure if it stays above that level until Friday, because it's only Monday today. So if you're looking at a weekly chart, you really do need, if you're looking for double confirmation, we don't have it yet. Okay. On the daily chart, it broke through that weekly level. You could certainly test the waters, take maybe a half a position or a quarter position or a third position, and maybe add to it towards the end of the week if you notice that this thing is starting to take off, on Friday. Here's ARC-Q. Here it is on the weekly chart. That one has not even broken through the 103.13. It's just 3 pennies away, though. That's a weekly level from that candle from August 15th. Pull back. And once it breaks through that, notice how it was pretty close to that level back here, back in 2021 as well. So technology and robotics, it makes sense that this would, here's an ETF that makes sense, should be going up now, especially with AI and everything else. And not sure that we all want this. I'm not sure that general public should want this to go up, because once the robots come, folks, they're going to take our jobs. They're going to take the manual jobs for sure. It's going to be, but maybe it will allow people to live their lives a little bit easier. That is, of course, if governments actually take care of the people, which I doubt they will, but we'll see. But yeah, robotics, you throw AI in there with the robotics, and now you've got little armies of robots. Can you imagine that? We're not that far away from it. I mean, I'm sure you guys have seen some of the videos on YouTube of some of the robots that are out there today. It's just ridiculous what they can do. Okay, here's one more. Lyft, the weekly chart. The weekly chart has been broken from that high from November 15th, 2024. Let's see. It has not taken out that high here yet. It looks like that high is around 2082, and then it's going to have a monthly level of 2152. I would probably be focusing on the monthly level. I've got it, yeah, hold on to that. See that circle right there? It's from that candle. You can see how price basically, reached that level and dropped, came back to that level here and dropped, and now it's going to retest that 2152 or 21. Is it 2152? Yeah, 2152. So I'd want to wait a little bit longer to make sure that it breaks above. Now, if you look at the weekly chart, we are already above the cloud. Okay, we're above the 200, but the 200-day is still declining. And so I'd want to wait for that to break through. That's the huge accumulation stage. If you think about how many years. Imagine being stuck in this for that long and just waiting for this thing to pop. So I'd hold off a little bit. If you haven't taken a position in this, wait for the breakout. Wait for the breakout. Because what happens if it just continues to drop again? It could just as easily come back to that same level. Okay, the sellers start pushing the price down again. Okay, it could happen, and then you're stuck in this for a little while, waiting it out. So that's my suggestion here. Here's the daily chart. On the daily chart, it did break. Like I said, it broke through that in 1907, so it looks pretty good. But it's got that 2152 to contend with. And folks, that's gonna do it for this video. Thanks for watching. I appreciate all of you. Don't forget to like, subscribe. Remember that it's easy to become a member. You just hit the join button. Okay, they brought the join button back, and then subscribing is free. Okay, once you subscribe, I'll pop up in your subscriptions. You can hit the notification bell so you know when a new video pops up. And the other thing I would also recommend is that you share this video with someone, okay, that you think might like it. All right, and that's it. Guys, have a good rest of the evening. I will catch you all in the next video.